Hi, welcome back to the channel. Now, before I get into the week in review, thank you as always to everybody who reached out and commented, liked, shared after the analysis that I've been putting out over the last couple of weeks. I've been asked for many updates on some of the charts, so very quick 10-minute week in review for you. Now, the S&P 500 has been chopping around this week. However, to reiterate the same message that I've had over the last couple of months, is we are still trading above the 10-month moving average in the S&P 500, despite all the doom and gloomers, the doom mongers, etc. This is a risk on indicator. If we're above the 10-month moving average, it's very easy to make the case that we should be buying stocks below the 10-month moving average. Again, that's where you would probably look to get a little bit more defensive. Now, we do have a massive financial crisis, regional bank crisis. I am very much aware of the macroeconomic picture, but we are still seeing XLF continue to hold the key levels again that I've been highlighting over the last couple of months. Provided XLF is above 30, I think things are okay. We're of course seeing massive capitulation in the regional banking scene. Some of you will have seen a tweet that I put out yesterday just saying what ETFs in the regional banks are we looking to buy. I always look for capitulation. Now, when I look for capitulation in broken down areas of the market to take advantage of these rebounds, it's not a definitive market bottom call by any means, but what we can do is we can take advantage of these tactical rebounds to the upside from very oversold conditions. I am noting that there is a bullish divergence there with RSI. Now, my thesis has played out. This for me is a signal bar, and today we've had a bit of continuation. Just to reiterate, there's no hindsight indicators here. This was posted on Thursday evening. We've also got the US dollar index. Why is a US dollar index important? Well, I think it's driving the whole market. Now, the US dollar index is again flirting with big support levels. The big question we all has is, well, what happens if the US dollar index breaks down? Well, as my chart shows, there is a very clear inverse correlation with the US dollar index and the S&P 500. So if the US dollar index breaks down, I think it's quite logical to expect the S&P 500 to show a little bit of strength, which I know will go against those of you that are fixated on the economic side of things, which I don't think is a good aid in the current environment. We can also look at the euro US dollar. The reason, again, I'm watching the currency markets for clues is because of these relationships. We can see that the euro and the S&P 500 are strongly correlated. The charts look almost identical. If the euro breaks out of this sideways range, again, very similar to the US dollar index, where if the S&P 500 catches a bid, then again we're looking at a further evidence of a risk on environment. To the other side of things, we've got the risky areas of the market, the areas like the micro caps, again flirting with potentially breaking down. Intra week here we got as low as $98 and a bit of change, but as the session on Friday here, which I should add has still 90 minutes to run, the micro caps are still continuing to hold on to key levels. My work is not focused on micro caps and riskier areas of the market. I'm looking for areas that are showing a little bit of strength, or the potentially early innings of showing strength. I'm looking at very buy low, sell high charts. I'm looking at charts that are breaking out. A lot of my premium work for our clients and members is focused on those types of charts. I will have some clear examples in just a moment when I go through some of the individual charts. But if you are still here, it tells me that you're probably getting a little bit of value from my work. So please do hit the like button. It does help to get my work a lot more noticed than it is. So it would be hugely appreciated if you hit the like button and subscribe to the channel. So let's start off with a few charts that I have been covering across social media. Again, if you picked up our analysis last week, there will be a lot of interest in Apple. We've had earnings which have gone out this week, and as an Apple shareholder, I very much like the sound of $90 billion share buybacks. Now, again, what I will say is if there's any disclosures that I have over the next few minutes, I will make them on the charts. Any charts that we have been recommending to our clients and members over the last few months, they are clearly mapped out. But for those of you wondering, the target that we're working with on Apple is very, very straightforward. These all-time high levels around 180 to 182. Now, Meta is a chart that I covered last week, just highlighting that these levels here around 236, that the chart was getting a little bit frothy, and after a 100% plus run, that it would be very, very logical for it to start to take some kind of breather. Now, we have seen that. For my work, I like to use systematic process. I don't like relying on news headlines or thoughts and feelings. I like trailing stop losses. Our trailing stop has not been activated on it. We are still currently bullish on Meta, but I think it's probably getting towards late stage in the game. But provided these levels hold, then you can still continue to be bullish on Meta. The levels that we're working with here are around $220, which represents the trailing stop, and it would also represent the breakout that we've seen here as well. We've got the gaming sector. Now, I did touch on this chart last week, and excuse me, in last week's analysis and in the week in review, the gaming sector is breaking out on both an absolute and a relative basis. The chart that we've been working with for our clients has been DraftKings. Now, DraftKings put out earnings 24 hours ago. The market was a massive positive reaction. The stock is up 15% overnight. What I will be communicating to our clients this weekend is that this is a very logical pivot level. It would be very, very normal to see a little bit of digestion of gains here, but ultimately, if you are a long-term bull in DraftKings, again, I would just I wouldn't advise anything, but I would urge maybe some kind of systematic process to keep you in the position. And like I said, trailing stop loss, we've currently got around $21, but the stock is off and running, hopefully on the back of positive earnings. Again, Monster Energy, covered this chart last week. It has broken out again. It's very, very normal to expect some kind of short-term pullback, in my opinion, now with Monster. The earnings were very, very good. But the RSI level is a little bit overbought at the moment, so I think any pullback to around that 57.50 level, I think that would be a level where you would probably expect buyers to step back in. Many of you will have heard me say over the years, pullbacks within uptrends oftentimes offer opportunity. So again, I think a pullback with Monster would be very, very healthy for its longer term structural trend. XBI has broken out this week above its 200-day simple moving average. Again, I covered this chart last week. We are still working with further upside here, around 13%, with upside objectives around $94. Some of you will have seen me post this chart to Twitter this week for Zoom. There's a lesson, I think, in risk management here. After an 870% move in Zoom, we are now back to the scene of its IPO levels. Now, what I will say about this chart is that the chart is clearly in a downtrend. I'm not going to break the internet with that thesis, but there's a massive risk to reward proposition by buying at these levels with a stop loss below the IPO. But what I'm personally looking at here, if you look at the top right hand corner of my chart, you'll see some key fundamental data that I like to use, just PE ratios, earnings growth, etc. I know Cathy Wood is big on Zoom. I'm not very big on Cathy Wood, but I think if Zoom is to give up the IPO levels, that's a big problem. And for me personally, although I don't advocate and personally don't outright short stocks, I do look at things like options. I think put options would make sense if Zoom gives up those IPO levels. Gold, massive levels here. Are we going to finally break out above the 195 level? If you look at the gold priced in US dollars, the level there is 2100. But I think most of us will be use ETFs. I think if gold gets above 195, then I think that's a bullish catalyst to new all-time highs. And I think that's probably the move that the gold bugs have been waiting years for. But at the moment, price still has to prove to me that it wants to get above those levels. Now, Clorox, I think, big earnings reaction. We got as high as 178. But what I am now looking for here is potentially a retest of the 158 breakout level. If the breakout level holds, then that will be an opportunity to buy in to a solid consumer staples stock. We've got QCOM pulled back to that $100 level, again dating back to 1999 and 2019. This is a massive level for the stock. Negative news catalyst this week, but as long as it's above $100, I think you can still remain bullish on QCOM with a very easy out below that $100 level. And we have PayPal with earnings coming up this week. The chart has been horrific over the course of the last couple of years. I think if you're a long-term investor in PayPal, it's probably been quite painful, especially when you compare the 5-year historic returns, with the likes of Visa, MasterCard, and of course even the S&P 500 has massively outperformed it. PayPal has returned 1.6% over the last 5 years. The company seems to just be under a lot of stress at the moment. Not terribly appealing, but I think for me it's going to go one of two ways. There's going to be a breakout above this trend line, or it's going to break down. So either way, I think adding PayPal to your watch lists for next week might make some sense. But if you're still here, please do hit the like button, share and subscribe. If you've just stumbled across our work for the first time, please do check out our website at honeystocks.com. We provide technical charting research and memberships to all of our premium work. Every single weekend we provide access to all of our premium analysis and our updated charts and ideas. We provide access to our high conviction investment ideas, like for the likes of DraftKings, Monster, Apple, etc. We provide access to our midweek halftime report, which goes out every single Wednesday to our clients and members. We also provide access to a wonderful community of traders, investors, analysts, professionals from all over the world. And we also provide access to all of our chart books, which cover stocks, ETFs and commodities, as well as complete access to our technical analysis program as well. But feel free to go and check out the list of all of our investment alerts. I'm very, very unique in what I do. I timestamp all of my work, and you can go and see what we've been recommending to our clients this year and every year for the last 5 years, and how our stocks and our recommendations perform. So if you are still here, thank you very much for watching, and I hope to welcome you soon. Thanks.